Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. There's been a sharp recovery from the lows that we've been talking about of late, and that so far has converted into higher gains for the market, something which was not expected when we started the trading day, right? But for now, the Nifty is up 183 points. We do have the mid-caps which are powering through, and how. It's a 700-point gain, more than that actually on the mid-cap index. Bank Nifty is supporting. We have a gain of around 200 points on the Bank Nifty. So across the board, it is a very strong looking screen, something which was not expected to be at these levels, but of course this is something which has surprised the markets as well. But we do have a lot of commentary coming in from auto players, and that is something that we've been playing for you. In fact, our colleague spoke to Tata Motors. They say expect single-digit growth in intermediate, light and medium-duty commercial vehicles. This is the word coming in from Girish Wagh, who's the Executive Director of Tata Motors. Speaking to my colleague Parikshit Luthra at the SIAM Annual Convention, he also bats for light, medium and heavy-duty trucks to be covered under FAME 3. Listen into what he had to say.
So we are working on three main areas as far as CapEx is concerned. The first thing is the entire sustainability transition. So whether it is about shifting our facilities to 100% renewable energy or becoming net water positive, zero waste to landfill, I think all the sustainability goals are well underway. By the end of this decade or much before that, I think we should be net positive on all this. In addition to that, in terms of the scope 3 emissions, which is a large part of our emissions, is the vehicular tailpipe emissions. I think that's where we are working on in terms of electrification. But as we know, the journey in commercial vehicles is going to be through alternate fuel. So we worked on fuel agnostic platforms. So we move from diesel and petrol as a fuel to alternate fuel that is more of natural gas. We also move to flex fuel, and then finally we move to electric. Now within electric, we have been working on battery electric as a technology. We've also been working on fuel cell electric and hydrogen as a fuel in internal combustion engine. I think these are the technologies that we're working on as far as sustainability transition is concerned. In addition to that, I think we have been working on autonomous in terms of more of advanced driver assistance, which should help improve the productivity of the drivers in the country. And the overall digitalization piece, which is our fleet edge as an option or as an offering for the customer, which will help improve their productivity.
Right. On electrification of the portfolio, what's the current offtake of EVs in your total sales at the moment, and how much do you expect this to increase by 2030?
So the current offtake still remains in lower single digits, right? But I think the good thing is we have now more than 5,000 ACE electric and around 3,000 electric buses running on the roads. The buses have covered more than 200 million kilometers cumulative. ACE has covered more than 43 million kilometers cumulative. So we have a very good experience under the belt. We've also seeded some of the electric heavy commercial vehicles in specific applications to understand how they are performing. So I think in variety of applications, we have seeded our electric vehicles. I think we are also looking at clarity on the FAME incentive, which all of us are aware about. I think FAME 2 ended a few months back before the general elections. I think we are now looking at FAME 3 being rolled out. And we are also expecting as a commercial vehicle industry that the FAME 3 also includes N2 and N3 trucks, because it was limited to N1 category, which is up to 3.5 tons. We want N2 and N3, which is light, medium, heavy, to be included. We also want private buses to be included. And since for long distance haulage, I think hydrogen internal combustion engine is a good technology. Maybe we are also requesting the government to include this in the FAME incentive.
Right. Did the disruption in FAME, which stopped in March, affected sales right now of your electric portfolio, because the EMPS scheme does not cover anything but 2 and 3 wheelers? And is somehow the lack of clarity, lack of timelines on FAME 3 impacting manufacturing and future plans right now?
So fortunately for us, the buses which we are supplying as a part of the CSL tender are anyway covered under FAME. So that part of our business has not been impacted. Private buses are not yet as a part of FAME, which is another segment that we are pursuing. But we are requesting the government to include private buses also in FAME 3. I think there has been some impact on the small commercial vehicle, where the FAME incentive was almost equivalent to 15 to 20% of the price to the customer. But here I think we have also come up with a new offering which does give better total cost of ownership to the customer. But if you ask me, we are certainly looking forward to the government coming up with the FAME 3 scheme and also include some of these segments which are not covered today.
Give us a sense of some of the priority launches for you in the remaining part of this fiscal and maybe the early part of FY26.
Right. So I think we have a very wide portfolio from half a ton payload going right up to 55 ton gross vehicle weight and 7-seater passenger carrier to 55-seater. I think we keep on coming up with variants and launches across the range, and we will continue to do so, including electric vehicles. So we do have electrification of the portfolio undergoing. So as we go ahead this year, we will launch a few more electric vehicles also. And of course, I think with the government's focus on alternate fuel, we will have some coming on CNG and LNG fuels also.
So how many electric and how many alternate fuels?
So electric, of course, will be in single digit. But if you look at our IC engine portfolio, the kind of variants we come up with is generally in double, triple digits.
Okay. My final set of questions. When it comes to alternate fuels, what kind of portfolio, as of now, are you sure of having by 2030 if we were to ask you percentage-wise of different alternate fuels, electric and ICE?
So, I'll be very happy to give a specific percentage. I think that clarity certainly is not there. Even in CNG, if you recollect, in small commercial vehicles and light commercial vehicles, there was a good growth, which happened 2 years back. But then after that, the CNG prices started increasing and the growth actually declined. So after the Kirit Parikh committee report, there has been some stability in terms of CNG prices with respect to diesel. And we are now seeing the CNG market coming back first in intermediate and light commercial vehicles. And we expect that to happen in small commercial vehicles also. I expect that between small and light commercial vehicles, the penetration of CNG should be around 20% or upwards of 20%. I think electric penetration will also vary from segment to segment. I do expect a good double-digit penetration in buses. I do also expect the penetration reaching double digits in small commercial vehicles for electric. I think in heavy, long haulage trucks, it will take time, but the penetration will be in lower single digits.
Well, a very interesting conversation there with Tata Motors. Hopeful that there could be some extension as far as the same FAME subsidies are concerned. Let's now slip into a short break. The management of Nitin, we'll just hold on to that. Well, what we have to look out for currently is the fact that, number one, we are awaiting the data as far as the mutual fund is concerned. Before that, if we could just pull up the intraday chart as far as the Nifty IT index is concerned. That particular segment and that particular space is the one that's doing very, very well. What's doing exceedingly well is mid-cap IT stocks. So if you have a look at names like Coforge, have a look at names like Emphasis, the entire pack, even some of the other names like Tech Mahindra, look at, also look at names like TCS, Infosys, all of these stocks are doing quite well. But you've been awaiting, the mutual fund data, and that's what, markets will have a close eye on.
Oh, yes. So a lot happened in the month of August as well. But for now, we've got the first number, which is the net equity inflows, which have been higher than the month of July. It has come in at 38,212 crore rupees, which compares with a number of 37,082 crore rupees. Remember, we had a record high number in the month of June at 40,573 crore rupees. Very important to track here will be what the flows have come in from the NFOs this time, because we did have a lot of them in the month of August as well, be it the tourism fund that came in from Kotak, be it the other ones, and that's something that could have contributed to the kind of flows that we are seeing as well. Large cap fund inflows, look at that, because large caps did perform very well. We have an inflow of 2,636 crore rupees, which compares with an inflow that we saw the month gone by at 670 crore rupees. In fact, this is the highest number that we have seen in since last June, definitely since last June. June 2023 saw a net outflow of 2,000 crore rupees, and since then we've been hovering around those levels only, and then there was an improvement in flows. So definitely that's the big number to watch out for. What have we seen in terms of big inflow in the large cap space? around 2,600 crore rupees, and that is the bar that should come up for you on the screen, the large cap flows, because that has seen a big increase. This 2,600 number we've not seen in a long time. So as I said, it is at a multi-month high, and that is the big takeaway, because Vivek, we've been talking about how small caps and mid caps have been doing well, large caps were still lagging, and a monthly number of 600 to 700 crore rupees, nobody would have actually seen that. So the August number is, of course, it's a big bar there. Our producer should just change that. It is the latest number. The August one should be around 2,600 crore rupees.
So run rate of 600 to 700, and it's now spiked up significantly.
It's spiked up significantly.
So it looks like, everyone's been watching us, everyone's been telling us, to maybe take some profits off the table as far as the small cap and
small caps and mid cap. So that's why the small cap and mid cap number will be very important to track as well. I'll have to check the number for now, but yes, that is the next big number that we'll be watching out for. And I do have the August number. It's just that it's such a huge, huge data that is given. So there you go. Just look at the increase that we've seen, Vivek. April it was just 400 crore rupees. May it increased. June, people thought that maybe with the market run-up we saw post-elections, large caps would have contributed.
So they haven't moved out of equity, they've stayed with equity, but it's more of a flight to safety.
Exactly.
They see more comfort as far as the large cap space is concerned. What else will we watching out for as far as this particular equity inflow or the mutual fund data is concerned? Number one, SIP numbers monthly have stayed very steady about the 20,000 crore mark. Now, it'll be important to see whether, given the fact that we saw very volatile last couple of months, whether that sustains. The other important numbers to be seen, and something that the market will watch out for very closely, is the kind of activity as far as the mid cap as well as the small cap fund is concerned. And Sonal, like you mentioned, there were a lot of NFOs. There was a tourism fund that came out. So there also you did see very significant subscription.
So we have the data here as well for the new schemes. By the way, we have the data for the mid caps and the small caps. Mid caps this time around have seen over 3,000 crore of flows that have come by. So mid cap funds around 3,054 crore rupees. Small cap funds have come in around 3,200 crore rupees. So that also continues to be the case where we have seen an improvement in numbers. So last time around, we saw mid cap funds sees inflows of 1,644 crore rupees and small cap see inflows of 2,100 crore rupees. So it's not only actually large caps, even mid and small caps have done really well. In fact, we have some guests joining us now. Manish Mehta from Kotak Mahindra Asset Management is joining in. Mr. Mehta, good afternoon. Thank you so much for joining in. But definitely the big number is that big bump up that we've seen in large cap funds. Surprisingly, even mid caps and small caps have seen an improvement. What is the trend that you are seeing here? And do you think this is something which would sustain going forward as well, that confidence that has come back in large caps?
No, so in fact, if you hear the commentary, most of the fund houses and even at Kotak Mutual Fund, I think from a valuation point of view, we've been, sort of going out and telling at least the advisors and clients also that, large caps is probably where one should probably look at allocating new money. And either in the form of large cap funds or in the form of flexi cap or multi cap, where bias is more towards large cap, is where we've been seeing most of the flows that have been coming at the industry level.
Thanks so much for that, Manish, and thanks for joining us. We also have Akil Chaturvedi, who's joining us. Good afternoon, Akil. Thank you so much for joining us. First up, we asked Manish as well, what is your view as far as the sharp inflow that you've seen in the large cap fund space? And secondly, do you see inflows moderating as far as the mid cap and small cap space is concerned? What is it that distributors have been advising clients in terms of, maybe valuations being stretched in that particular segment of the market?
No, so absolutely right. I agree with Manish also that incrementally all of us in the industry, AMCs as well as distributors, we are suggesting to investors to move more towards large caps or flexi cap funds where the large cap allocations are higher. I think that is also reflecting in the numbers. So if you see, there's a divided house between multi cap, large cap, small cap, so all in the range of 2,500 to 3,500 crores. So it's a good balance across all categories. I think that's a good development, and I think the sectoral funds continue to do very well. I think it's more to do with the NFOs. So that's 18,000 crores. So still a very large pool of allocation going out there.
Right. In fact, this time around in the month of August, there have been 18 NFOs, the number of schemes that were launched, new schemes, and that garnered around 13,815 crore rupees. That's the data from AMFI. And if we just talk about the sectoral funds here, even that, as you said, has done well. It's around 18,117 crore rupees. But does that not warrant some caution? Because a lot of that money is coming from NFOs. And as you said, some of these sectors have already run up. So don't you think that is a space that investors should be a little wary of?
No, so I think, broadly the way, there are opportunities in the market. Of course, the core allocation always should be around diversified funds, which are multi-cap, flexi-cap kind of opportunities. But through NFOs, there are these niche opportunities where there's a good growth opportunity from next 3 to 5 year perspective. Investors are also, a lot more aware and depending on their risk appetite, they tend to take allocations towards certain themes or certain sectors. So I believe that people take tactical allocations, and I think broadly the opportunities are there from medium-term perspective. So yes, I think and NFOs always tend to attract new customers, new investors, new folios. So it does remain in vogue, honestly.
Manish, you've been around for a while now. So number one, given the fact that equity markets right now are very buoyant, do you see the trend of NFOs continuing? Secondly, what kind of SIP numbers are you penciling in? And given the fact that, that is seen as more sticky, do you think it can continue to sustain above the 20,000 crore a month mark?
Yeah, of course. Sorry, Manish, go on.
Yeah. Okay. So coming to NFOs, primarily, the thing is, mind you, it is just not sectoral funds where you've been seeing this huge surge of money coming in. It's a lot of thematic category of products also that people have been looking to launch. So maybe, in the Make in India theme of manufacturing India, like those kind of products. So it's a mix and match of sectoral thematic kind of products, which most fund houses have been launching. And that's where you've been seeing a surge coming in. The other thing what's happening is somewhere it looks like the investor is okay to allocate money lump sum through NFOs because the fund manager or the portfolio manager also has, a stipulated number of months available for him to build his portfolio and allocate. So maybe they feel a lump sum application through an NFO, will anyway get invested over a staggered period of time as the portfolio manager builds the portfolio. So that probably is a good approach. And when it comes to ongoing products, obviously SIP numbers continue to remain very, very sticky. And at least we believe very strongly that as awareness is, increasing amongst investors, I think these numbers can probably only head upwards. And as more and more investors are having a very positive experience of, investing in our markets through the SIP route, I think it's just giving them that much more encouragement to keep, using that as an approach to at least regularly invest and, at least ensure that there is a rupee cost averaging.
Okay. The next, of course, the important thing would be the net inflows in SIPs also, right? Because there were clarifications, there was a lot of discussions that the net SIP number has been going down. But Manish and Akhil, thank you so much for your time today and joining in with your first take. There's a lot of data to go through. So, of course, we'll do that. And at 2 p.m., we'll have the conference call from AMFI as well, where we'll get more details. And, of course, the systematic investment plan, the SIP number as well. Thank you so much, gentlemen, for joining in today. Okay, with that, let's move on. We'll, of course, keep talking about mutual fund numbers in just a bit as well. But for now, let's quickly take a look at the markets because it's a 180-point uptick that we are seeing on the markets. And the mid-cap index is doing well. And in fact, it has seen more gains from when we started the show. So it's 826 points higher now. It's a one-way rally that we are seeing. So we'll discuss that in a lot more.
We'll have to make a mention of, how some of the pharma stocks are doing.
Yeah.
It's not that, the US Biosector Act was something that's quite new. Markets have been pricing it in for quite some time. But look at some of the stocks. Look at names like Laurus Labs, Granules India. Look at some of these stocks. They're doing very, very well in the session today. Piramal Pharma, Divi's Labs, even, it's a large cap, but it's up almost 4% today. But on that note, let's slip into a short break. The management of Nitin Spinners joins us next to discuss their business outlook and more. Welcome back to Midcap Radar. Well, the company in focus is Nitin Spinners. The stock has surged more than 27% in 2024 so far. To discuss the current demand trends, both in the export as well as the domestic markets, we are now joined by Dinesh Nolka, the Managing Director at Nitin Spinners. Good afternoon, Mr. Nolka. Thank you so much for joining us today. First up, like we mentioned, Q2, we are in the midst of what has essentially been quite a volatile and a quarter that's seen quite a lot of upheaval as far as the space that you're present in is concerned. When you saw us last time, you said you expect to see 10 to 12% volume growth in FY25. Do you stick to those numbers? How has Q2 been, especially in the context of all of the worries, especially as far as Bangladesh is concerned? Has there been any disruptions in your operations?
Good afternoon. Thank you for having me on the show. Demand per se has been reasonable, quite robust, I would say, and we still stick to this, our guidance of about 12 to 13% increase in the volume side. So that is still there, and we are operating at quite optimum capacity levels at this point of time. As far as yes, Bangladesh is concerned, there has been quite a lot of upheaval during last 1 month. There has been, apart from the political scenario, there has been, they are also affected by the floods in quite a lot of part of Bangladesh, and now they also have certain labor disruptions. So it is the Bangladesh capacities in textiles is up and running, but they have, I would say, they are still not reached the full capacity level. They are still running at about 85 to 90% levels. So as far as we are concerned, there has been a reasonable demand. We have been supplying our old contracts as well as getting the new orders. Plus the payments are also quite regular there. So we don't see any major upheaval in the short run as such, as far as Bangladesh is concerned.
Okay, so no impact for you, but the general unorganized sector players were telling us that the yarn exporters to Bangladesh, they could be impacted because of the capacity constraints that Bangladesh is seeing currently. We get that point. Your export contribution, that has been increasing, and we have spoken about how exports have been in focus. What kind of growth are you expecting this year? Have things changed in terms of inquiries coming in from global players to India after the changes that we have seen because of the unrest?
Exports for us, we have about 60% of our revenues going in for exports, and we expect to maintain the similar kind of run rate as well. So whatever growth in the total top line we will have, similar kind of growth we will have in the exports also. And for that purpose, we are trying to explore various other markets apart from Bangladesh and certain markets which has been disturbed due to the various geopolitical situations. So we expect, of course, we have issues of Red Sea where the costs have increased, and other geopolitical tensions also happening in Russia, Ukraine. But we feel that we should be able to manage the growth for us, at least in the export market.
Okay. So, Mr. Nolka, I wanted to understand, when you say you'll be able to maintain the growth that you're seeing on the top line, that is something you'll see in exports. So, 10 to 12% volume growth, will you see a higher realization growth as well? What are you penciling in as far as cotton prices are concerned right now? Has there been a big movement there?
I think realizations are not going to improve any further at this point of time. It looks as if for next 5-6 months, because cotton prices have been quite subdued for last 6 months. We have a major challenge in hand where the international cotton prices are getting down, and whereas Indian cotton prices, due to heavy rains and less irrigated area, are slowly inching up. So we have in Indian cotton prices going up, whereas the international cotton prices coming down. So we have a challenge in hand for that. And that is something which we'll have to navigate over the next 2-3 months once the Indian cotton prices settle down. So overall, we don't see major improvement in the realizations because the subdued cotton prices are there. And cotton prices outlook, I would say, it should remain quite stable in India, since we have a minimum support price operations in place, where they will have downside is limited. And because of lesser prices internationally and a lot of imports happening, we don't see upside as well. So this could be a very steady state of kind of pricing scenario for cotton for next 5-6 months.
Got it, sir. Mr. Nolka, thank you so much for joining us. So you expect realizations to remain around the current levels, and also you stick to your volume guided band in the range of 10 to 12%. Upside, you have given us a 13% volume uptake. But moving on, in a press conference earlier today, the Congress said that the SEBI chief Madhvi Puri Buch was guilty of willful concealment. The party claimed that an advisory company owned by her continued to generate revenue after she took office, and the advisory company's clients include the likes of Semcorp, Pidilite, M&M, Dr. Reddy's and ICICI Bank. The Congress also claims that the SEBI chief's husband, Dhaval Buch, received rupees 4.78 crore between 2019 and 2021 from Mahindra & Mahindra. Mahindra & Mahindra has issued a response to this, saying that they hired Dhaval Buch in 2019 specifically for his expertise in supply chain and sourcing soon after he retired as Unilever's Global Chief Procurement Officer. Mahindra Group says Dhaval Buch spent most of his time at subsidiary Bristlecone, which is a supply chain consulting company, and he is currently on the board of Bristlecone. Mahindra Group says Dhaval Buch joined Mahindra Group 3 years before Madhvi Buch was appointed as SEBI chair, and the compensation has been specifically and only for Dhaval Buch's expertise and management acumen. Mahindra Group response says, and I quote, "We categorically state that we have not at any point requested SEBI for any preferential treatment. We maintain the highest standards of corporate governance. We consider these allegations false and misleading in nature." On the back of that, Mahindra & Mahindra, look at the stock, largely flat, has seen a little bit of volatility in the session. But with that, it's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.